Bull markets. We've got Cameron Brandt joining in on the show right now. Cameron, hi, morning. Great to have you on the show. And I'm just going to take a leaf off what we were discussing earlier. Crude, as volatile a piece as it may be, but for now it seems that there's quite a amount of stability coming in, and especially after OPEC's decision yesterday. Tell me, what is your reading on how flows are moving to India, and whether you think that there could be a pivot anytime soon when we'll have the FII and FPI money come back in?
Well, certainly some of the preconditions for stronger flows to India are beginning to come in, not just the crude, but investors here still watch the monsoon rains closely, and those have taken a turn for the better just recently. That said, however, investor intention at the moment is elsewhere. It's nothing really that India is doing wrong, and the omens are certainly better. But the real focus at the moment is whether to stay in or get out of the artificial intelligence trade. Sort of linked to that analysis is the question of just how hawkish the Fed will be. And we're also seeing money move into U.S. equity funds ahead of a corporate earnings season that is predicted to deliver another 20% year-on-year increase in the S&P 500 names. So at least for the moment, interest in the emerging markets is frankly on the head of a few AI pins, mainly in Korea and Taiwan. And outside of that, there's really not a lot of interest in emerging markets. It's really focused on the US at the moment.
Morning, Cameron. Are you seeing some kind of rotation coming in within the emerging markets back to India, given that you have a better crude oil price situation and some bit of growth coming in, maybe not as much as what we are seeing in some other countries like Taiwan and Korea?
I certainly think India is ripe for a bit of a rotation, certainly in the fund and ETF universe. But there remain a number of headwinds as long as there's this tremendous focus on AI and semiconductor stories. Until investors get comfortable that doesn't mean harder times ahead for software and services. That remains a question mark for India. And of course, energy. The energy picture, while it's much improved, energy is a volatile metric, and events in the Middle East, while they seem to be heading towards some kind of a resolution, it isn't signed and sealed yet. So I definitely get a sense that India is getting more positive attention, but I don't think investors, certainly, past couple of weeks, have felt any compelling pressure to get back in.
Cameron, you track for flows very closely. How do you think passive funds are looking at India at this point in time?
Well, passive funds by their nature will sort of take a cue from the market cap of your major names. They obviously have been doing better recently. So the odds are that India will make some gains in terms of those funds and the share of any inflows that they allocate to India. But from a foreign perspective, India is still a market where people looking for direct exposure are still more likely to go to an actively managed fund. So those will be the ones that should look for sort of meaningful sentiment change towards India.
I'm wondering what flows are up to when it comes to China, Cameron? Because, while the index has been trading firm, the Shanghai Composite, and it does indicate a broadly constructive tone, but again, very volatile in nature.
Right. In China has some sort of, I don't know if non-market forces are the right word, but Chinese authorities have been very clear that they don't want any repeat of the pattern they saw in 2015. And I think certainly domestic investors have gotten the message. It's a little hard to sort of get a fix on how China's economy is really doing. But it seems that the export sector has proved very resilient, but that the domestic side of things remains a work in progress. And certainly domestic investors are still not feeling terribly bullish.
Since we were talking about the AI trade, Cameron, and I don't know how closely you've been following this, but I'm just looking at Samsung's numbers, and their Q2 prelim numbers just dropped last night. Blowout set of numbers, yes, the operating profits have hit a record once again, but the revenue has actually missed what the street was anticipating, and the stock reaction was negative. It did fall about almost 6%. I'm wondering whether the market will soon run out of patience, and whether or not we will see a little bit of reversal or a pullback in this entire AI trade.
I think the market is very nervous about signals like that. Certainly here, more and more questions are being raised about how you provide the energy needed to keep the AI infrastructure running and expand it. And sort of some of the company to company trading is raising more questions. What we're still seeing at the moment, however, is that when those worries reach a kind of critical mass and sort of push AI stock prices down, there's still enough people who think I'd better jump in and here's an entry point. But the pattern has gone from sort of a rocket soaring towards the sky to something that's much more like 2 steps forward, 1 step back. So that issue you raised and others are definitely getting much more attention than they did last year.
Makes sense. Okay, Cameron, great chatting with you. Thank you so much for your insight this morning.
Not at all. Take care.